Today we're taking a look at ASX listed stock Ionic Rare Earths, ticker IXR, performing some technical analysis and making some predictions on where we can expect to see IXR go in the near future. Let's get into it. How's it going, guys? Ryan here and welcome back to another ASX stock analysis video. Today we're taking a look at a company called Ionic Rare Earths. Their ticker on the ASX is IXR and they are another rare earths company which are looking to get into mining their current resource, which sits in Uganda. It's near the city of Kampala and it is called the Makuutu Rare Earths Project. And this project has currently over 315 million tons and still growing rare earths within the ground, which is an absolutely insanely large deposit, especially one which is outside of China, which is what makes it very, very important at this point in time. As we know, Western countries, especially the US and Europe, are trying to secure supply chains of rare earth materials for extended periods of time without being tied into China. So this may possibly be one of those very long-term high-grade resources that could do the trick. This is a resource which exists within clay and is effectively surface level, which means they can perform heap leaching in order to get the rare earths and extract them out. They're also looking at not just the mining of the rare earths, but the processing side of things as well. They're trying to really get into the entire supply chain and add as much value as possible. Of course, this helps them not only reduce costs, but it also helps them to be able to have that control and be able to have their fingers in all the different bits of the pie when it comes to that supply chain. So I highly recommend you do go and check out IXR. It is certainly one of those companies which has a very bright future. We've just seen a report come out by Sprout, and the Sprout report is putting a target in place, and that target is at a value of 14 cents. So on that basis, today we're going to do some technical analysis, see where we're sitting now from a stock price perspective, and see how far it is and what we need to do to get to that 14 cent mark put out by Sprout. Let's get into it. Welcome into the IXR chart, guys. As you can see, we're currently closing today at a value of 5.6 cents. And you can see we had a nice little high over here back on the 21st and of course the 20th of January as well. And that was a value of 7.3 cents. So we've come down, I suppose, from that point. But if we zoom out, you can see that this has been, I'd say, a relatively consistent company over the past year or so when you're talking about the growth of its share price. So all in all, pretty good. It has certainly exceeded its previous high on the most recent run, and that high was 6.5 cents. But what we want to look forward to is, of course, that value which was set out in the report. And well, to be quite honest, that value is all the way up here. So you can see the value that certainly an investor could potentially be getting from investing in this company if the Sprout report was right. You're talking about 2 to 3 bags of value if you get in now, and it does continue to rise as per the Sprout report. But of course, that is based on the fundamentals of the company, and I expect that is certainly something which will be achieved, but in the long term, not in the short term at this point in time. But as we can see, overall, the company has been certainly performing very, very well. So let's zoom in and try and put in place some indicators and try and determine some patterns from what we have seen, I suppose, in the past. First things first, I want to put in place a little bit of a trend, and I think the trend can probably start from about here on the 6th of August, and we'll work on it from there. You can see this 6th of August mark has been a very, very important point for us. It is the start of that uptrend, I'd suggest. You can, I suppose, take the line back even further. And yes, we did, I suppose, hit that point previously, but it was below it. I think really the overall uptrend did start from the 6th and has, been trending that way ever since. We're still well and truly above that line. We did, though, certainly pop out of the channel when we broke out on a few separate occasions. I'm going to put in place the top end there. You can see we had a bit of a breakout when we hit those all-time highs. It broke on the 14th of January and then continued upwards. Right now, we've currently fallen back into that trading channel, but we're certainly still moving in the right direction. Things are just starting to cool off a bit, so that's absolutely fine. First and foremost, right now I can see at the moment we've got our 50-day moving average currently sitting at a value of 5.5 cents, acting as a bit of support for us. You can see it bounced off it today, and as well as that, we've got a bit of resistance at 5.7 cents. That's our 20-day moving average. Now it looks like that 20-day moving average is moving towards the 50-day moving average. If we see a cross of that, that would indicate that we're, starting to be in a bit of a downtrend. Hopefully that doesn't occur, but it is certainly a possibility. And right now, given obviously we've got this long-term trend, let's have a look at the shorter-term trend. And we're going to start from taking the high on the 21st of January and go from there. You can see I'd suggest that roughly it looks like we tried to actually break out of the downtrend that we had seen today and almost yesterday as well. And you can see that we're moving in this style of a direction, bouncing off these points, which has taken us back into that original channel. And this is realistically, when you look at it, a flag pattern. You can see we've got a flagpole coming up here, and then now we are moving downwards. This is actually a bullish trend. Whilst yes, it looks like we have dipped quite significantly since that point, this is a bull flag. We're moving upwards, and then of course we are coming back down for consolidation. It does look a bit steep, I'll give you that, but nonetheless we are still within that flag range. We've not broken below it, we've not broken above it, although we've had tests of each in order to, I suppose, try and do that. You can see, I suppose, the most apparent being over here at the end of January where we broke underneath it, but quickly shot back within its realm. So at this point in time, it looks like we've, bounced off that top line there at 5.9 cents, and it looks like we are now moving back downwards. Now, what we're looking for is a few things. First, let's look at the pattern. It's going in this sort of a shape. I'd then suggest it is highly possible that, given we have now, I suppose, gone back into our overall uptrending channel, that we will bounce off a value at its lowest at about 4.6 cents. That is the bottom end of our channel, so I'd expect that could be where we bounce before potentially, here we come down, bounce, then a breakout. That is what I would anticipate to happen within, I suppose, the next couple of weeks. We'll have to see what happens, of course, but that is my theory at this point in time. You can see as well, volume has been steadily decreasing. That is a good sign because the volume is decreasing on a downtrend, and I expect we're starting to get to a point where things are getting tighter now. And looking at something such as the RSI, for instance, hopefully should reflect that. And you can see it has. We are certainly dropping from an RSI perspective as well overall. Currently the RSI is sitting at 50.55, and now that's smack bang in the middle. We were in that overbought section significantly at 83.84 when we did hit our high. It needed to cool off, it needed to come back within the acceptable range between that 30 and 70 point mark. We're smack bang in the middle now, so it looks like we could, potentially move any direction. We've cooled off enough now to easily be able to bounce off the bottom of this channel and then break the flag and continue moving upwards. Ideally, what I'm hoping to see is not necessarily a massive move. Instead, I'm hoping that when we start to see our resource upgrades come through, we see a steady increase. Something like this is far too volatile for a stock to handle, and as a result, you'll start to see things like this occur. The steady increase in value that we had seen over, the 6 months prior, that is ideal. That is what we want to actually see. So I'm hoping we do see that, maybe on a bit more of a sharper incline, but overall, I want to see steady progression as opposed to volatility jumping upwards and downwards over the long term. Let's have a quick look now at the MACD, bringing that one up. As you can see, the MACD looks like it may be about to cross. The 12-day EMA is coming very close now to the 26-day EMA. If we see that 12-day EMA cross above the 26-day EMA, that is a very, very big buying signal. So looking for that, we would probably, I suppose, go down maybe ever so slightly before a potential move upwards. When that cross occurs, you want to see, is it going to actually cross and move upwards, or are we going to get something like this where it's very shallow, we have a false breakout occur, and then the price comes back down into this flag pattern, and obviously staying within the channel. Watch for the cross, watch for the price action. The only way to know if we're going to basically move upwards is a close above this top line of the flag pattern. We want to see that at least once or twice in order to confirm that we've broken the short-term downtrend that we have been seeing since we hit our highs back on the 20th and 21st of January. So overall, what is my price target short term? Well, quite simply, firstly, it's quite clear, break the flag, continue moving in the direction of the channel, but my price target, I'd say, is probably a horizontal one, and it's going to be this point here. It's going to be 6.4 cents in, I suppose, the short term, and the reason I'm doing that is because there has been a significant amount of price action at that point. We've touched it here as a point of resistance back on the 3rd of March. We then touched it again over here on the 7th of April, and we've touched it many times within our current runs, indicating to me that it is a point of significance. So I'd suggest we break the flag and then move towards that 6.4 cents mark within the short to medium term. That wraps up today's analysis of Ionic Rare Earths, ticker IXR. I hope you did enjoy today's video. I'd love to hear your thoughts down in the comments section below. Remember to leave a thumbs up as well if you found this video useful, and subscribe and turn on these bell notifications for more content. And with that, guys, I'll leave it there. I hope you have an awesome day. I'll see you next time. Cheers.